Here comes a recession. In this episode, I'm going to address Biden, corporate tax rate to increase by 33%. What is he thinking? Folks, you may think it's only going up 7%. No, I'm going to prove to you it's a 33% increase. This is going to cause a recession, is my prediction. So my name's Doug Andrew, and I've been a financial strategist, a retirement planning specialist for more than 4.5 decades. And I've lived a long time. I'm just about 70 years old, okay? And I've noticed through different types of economies, recessions. I didn't live back with the Great Depression, but I studied it. But you'll notice that sometimes when we have a booming economy, it's usually because there are incentives for companies, employers, to be able to expand and hire and so forth. So let's go to a recent administration, the Trump administration. Now, Donald Trump, whether you like his personality or not, he was a businessman. He understands economics. Unfortunately, a lot of politicians don't, and this is not a political agenda here. I'm just going to shoot straight with you. Now, because he understands economics, he realizes that if you lower taxes, then you will actually raise the revenue that's being taxed, which is better. It can bring in more tax revenue than just raising taxes, which causes employers to lay off people and shrink and not expand. So under Trump, many people realized, golly, this economy is booming. Why? He lowered taxes. He lowered taxes on individuals from 25% down to 22%, married couples making over 80 grand. It used to be 28%. Hillary Clinton wanted to raise it back up to 28. Bush, because of the terrorist attacks of 2001, lowered the 28% bracket down to 25. Trump lowered it down again to 22, okay? That put money in people's pockets. But he took the corporate tax rate down. Do you know in Toronto, Canada, they said, we're in business here. Zero corporate tax in Toronto, and all kinds of American corporations relocated to Canada, and we lost all that tax revenue because they said, you know what, we won't charge any corporate tax because we want you to thrive and boom. We seem to do the opposite sometimes here in this country. So Biden, in order to raise tax revenue for some of his extremely expensive initiatives, is proposing to raise the corporate rate. Under Trump was 21%, and he wants to take it up to 28%. And you go, wait a minute, that's only 7% more. No, it isn't. It's 33% more. Here's why. First of all, do you realize that most businesses operate on only about a 2 or 3% profit margin, okay? Now, as I'm explaining this, if this intrigues you and you can think of a business owner, somebody who really needs to hear this, be sure and share, post a comment, click like, subscribe, because I post an in-depth answer to a financial question almost on a daily basis on this channel. And wait till the end. I want to gift you a copy of my most recent best-selling book that'll help you understand what you can do to protect yourself from the taxes that are going through the roof. So let's go back here to the corporate tax rate. Under Trump, corporations had to pay 21%. So let's just simplify. Let's say a corporation had $1 million of profit for the year. 21% of $1 million means the corporation had to pay the government $210,000 in tax. You with me? Biden says, I want to raise it up to 28%. That's only 7%. No, it's 33% more money. See, 28% would mean the corporation would have to write out a check for $280,000. That is $70,000 more dollars. Now, sometimes politicians think, well, they can afford it. No, sometimes they have to raise the price of their goods and services, or they have to lay off people. They have to shrink. They have to stop expanding. They have to put off building the wing on their plant because they don't have the money. The government just took another 70 grand. 70,000 is 1/3 of the 210,000. It's 1/3 of 21%, okay? And so when you take 210,000 and you add another 70,000, that's a 33% greater cash outlay. Corporations can't afford this without doing what? letting people go, putting off plans to expand. They have to change to automation because they can't afford these employees anymore. And what does that cause? It causes a recession. I can't believe how many people go, well, how come gas is costing me $4 and $5 a gallon? How did that happen? It's because of taxes. It's because of irresponsible government spending. So this is very dangerous when we see proposals to penalize corporations who are the backbone of America and make them pay 33% more in actual dollars to the federal government in tax, thinking, oh, they can afford it. Mark my word, they cannot afford it without repercussions like a recession happening. So what's the long and short of this? Unfortunately, because a lot of times, as I mentioned, politicians don't understand economics. They just think, well, okay, I have these initiatives. I need $750 billion to begin to introduce Medicare for all, or forgiveness of student loans up to 50 grand. And people think, well, the money comes from the rich, right? Well, Biden says we're going to get it from the rich, who he says are the corporations. And so he says, oh yeah, we'll just raise corporate tax rates from 21% up to 28. That's only 7 percentage points, is the smoke and mirrors, when it's really how much? 33% more money. They can't afford that without having to do what? They have to shrink, they have to put off expansion, they have to lay off people, they have to switch to automation. And all of those things have a ripple effect of causing a recession. So what should you be doing? Because it looks like that's what's happening, because they're grabbing for all kinds of ways to raise tax revenue, and this is just one of the initiatives, I would recommend that you protect yourself from the negative impact of taxes going through the roof. Get ready for a recession and make yourself recession proof. Do you know that I've lived through several recessions and I've always come through with flying colors? For example, the Great Recession, 2000 to 2010. I'll even go to 2012. See, we call that the Great Recession because a lot of people who had $1 million saved by the year 2000, 9/11 happened, the terrorist attacks. They saw that $1 million nest egg invested in the market dwindle in value by 40% loss, down to 600,000 from 2001 to 2003. It took 4 years until 2007 to make back what they lost. They had to put off retirement 7 years. Finally, in 2007, at the end, they said, okay, we have our $1 million back again. And then what happened in 2008? As Warren Buffett put it, he said, when the tide went out, it revealed who was swimming naked, is what he said. People weren't protected. And many Americans lost 40% again for the second time in a decade. $1 million went down to 600,000. It took 4 years until 2012 just to get back to break even again. People using my favorite vehicle, which I call the laser fund, okay, during that 12-year period, $1 million in 2000 ended up growing to over 2.5 million tax-free. 2.5 million in the laser fund can generate about 250,000 a year of tax-free income into perpetuity. If you want to learn how and why, because this is a strategy where you don't lose when the market goes down. Okay, I may not make very much when the market goes down, but I don't lose. And Will Rogers once said people get more concerned about the return of their money instead of the return on their money. I don't have to wait 4 years to make back what I lost because I don't lose when the market goes down, because my money is not in the market. It's in the laser fund. I get to earn returns based upon what the market does, but when the market dives, I don't lose because my money is not in the market. Is this intriguing you? You need to read and study this book. It's my 11th book. It's flying off of our warehouse shelves right now, almost 1,000 books a week. Claim your free copy. It's 300 pages. It's actually 2 books in one. This one is about 14 chapters with all kinds of charts and graphs if you're a left brain thinker. If you're a right brain thinker, you flip it over. And you have this side, which is about 100 pages, 12 chapters with 62 chicken soup for the financial soul stories. If you want to read both, you can do that. But don't pay $20. I'll gift it to you free. You just go to laserfund.com, Laser fund.com, contribute a nominal amount towards the shipping and handling, and I'll pay for the book and fire out a copy to you. And if you like to listen and learn, or you like to watch and learn, there's other options there where you can learn about this dynamic instrument that allows you to accumulate, access, and transfer your money tax-free and be recession-proof, immune from taxes, inflation, and market volatility, which is caused by irresponsible government spending, the printing of money, and recessions.